If you've ever tried trading and lost money, it's not because the market hates you. It's because you were missing a system. Trading without the right knowledge is like walking into a storm blindfolded. In this video, I'll break down a complete beginner trading guide, the same foundation that successful traders use to grow small accounts safely and consistently. So, if you're new and you want to finally understand how trading actually works, stay with me to the end, because this might change how you look at the markets forever. Welcome to this complete beginner trading guide. In the next few minutes, you'll learn what trading really is, how the market works, what tools you need, how to build a simple strategy, and how to avoid the most common mistakes that wipe out beginner accounts. By the end, you will have a clear roadmap of where to start and what to focus on first before risking a single dollar. Let's start simple. Trading is the process of buying and selling assets to make profit from price movements. Those assets could be currencies in the forex market, company shares in the stock market, or digital coins like Bitcoin and Ethereum. When the price moves in your favor, you make money. When it doesn't, you lose. But here's the key. Trading is not gambling. Traders make decisions based on analysis, probabilities, and risk control, not luck or emotion. The real goal of trading isn't to win every trade. It's to manage risk, stay consistent, and let small wins add up over time. Every market in the world is driven by two forces, buyers and sellers. When there are more buyers, the price goes up. When there are more sellers, the price goes down. That constant battle creates the chart movements you see every day. As traders, our job is to identify which side is stronger and position ourselves accordingly. You'll also hear words like liquidity, which means how easily something can be bought or sold, and volatility, which is how fast prices move. Markets move because of news, emotions, and massive institutional orders. Understanding this flow of money is what helps traders spot high-probability opportunities instead of guessing. Now, let's talk about the types of trading and how to choose what fits you. There are three major markets most beginners start with: forex trading currency, pairs like Euro, USD, stocks buying or selling company shares, and then cryptocurrencies. You don't need fancy equipment to start trading. Here's what you actually need. First, a regulated broker. This is where you open your trading account. Always check that they're licensed and transparent. Second, a charting platform something like TradingView or MetaTrader that lets you analyze price movements. Third, a demo account. This is where you practice trading without risking real money. It's the most underrated tool for beginners. And finally, a stable internet connection, a clear trading plan, and the discipline to follow it. Remember, practice on demo until you can consistently grow it for at least a few weeks before going live. Now, let's talk strategy, the part most people rush into without a plan. Every good strategy has three main pillars: trend, support, and resistance, and entry and exit rules. The trend is your friend until it ends. If the market is making higher highs and higher lows, it's in an uptrend. If it's making lower highs and lower lows, it's in a downtrend. Support and resistance are price zones where the market has reacted before. Support is a level where price tends to bounce up. Resistance is where it tends to drop down. They act like invisible barriers that guide your entries and exits. Decide exactly when you'll enter a trade, and just as importantly, when you'll get out, whether in profit or loss. Never enter a trade without knowing both your stop loss and take profit levels. Trading is not about predicting the future. It's about managing probabilities with structure. Here's where most beginners lose, not on the charts, but in their mind. Trading is about controlling emotions more than it is about finding perfect setups. Fear, greed, and impatience destroy more accounts than bad analysis ever could. You'll face losing trades, that's normal. The key is to stay calm, stick to your plan, and protect your capital. Think like a risk manager, not a gambler. The best traders aren't those who win the most. They're those who lose the least and last the longest. Before you start, learn from what destroys most beginners: trading without a plan, using too much leverage, or risking too much on one trade. Jumping between strategies every week, trading based on emotion instead of logic, and ignoring risk management. Every professional trader has lost money. The difference is, they take responsibility, review their mistakes, and adjust. Your goal as a beginner is to survive long enough to learn, because once you master risk and patience, profit naturally follows. So that's your complete beginner trading guide, everything you need to know to start trading with the right foundation. You now understand what trading is, how markets move, the tools you need, the basics of a strategy, and the mindset required to stay consistent. But there's one topic that separates profitable traders from the ones who blow accounts: risk management. This is the system that decides whether you keep your capital or lose it all. In the next video, I'll show you the exact risk management system that prevented me from losing my profits, and how you can use the same approach even with a small account. So make sure you subscribe, turn on notifications, and comment risk system below so you don't miss the next video. Remember, trading isn't about getting rich overnight. It's about getting better every day. See you in the next one.